Mic check, mic check. Good morning. Good morning, good morning, good morning. Check, check, check. Check, check. Good morning. Okay, what a weekend. Wow, right? A bunch of stuff happened. I don't even know where to start with that. And because of that, all the news that came out this weekend, who knows where things are going to go today. We're coming back from the holiday period. Mostly everybody should be back from vacation from the holiday period. I'm expecting for us to have back to normal volume, hopefully normal price action, but we don't know how much news has come out that the market hasn't reacted to yet. So going into today, my plan is to take it easy. And that means with position sizing too, probably size down, right? That's just what I'm getting at. Not because there's a lack of setups out there or because I have a lack of confidence in my own trading ability, but I just don't know how things are going to be. What is the market sentiment going to be like? So today for me is a feeler day where, I'm just getting back from vacation myself. I'm just getting back from holidays myself. I'd like to get back into a routine of getting back into going to work and trading and reading price action and feeling all of those emotions and everything that comes along with it. So it's a feeler day for me. I would recommend that you treat today the same way as well. Just protect yourself. Protect yourself until we feel like we get a good grasp or have a good grasp of how things are moving. We have to size down, right? We want to always protect ourselves until we get to that point where we're like, okay, now we get it. We feel comfortable, confident going in with normal position sizing. So we start with SPY. First one on the watch list. The daily chart time frame tells us nothing about SPY. It kind of looks like a larger ascending triangle here that's starting to shape up on the daily, but we do not have a day where this is trading anywhere near the all-time highs. So the breakout of this ascending triangle on the daily could happen, maybe even as soon as this week, but I don't think that it's a threat to happen today because we'd have to see SPY get all the way to $692. But what we could see, potentially, would be a break of this downtrend trend line and then the start of a move back up. So for that reason, if I go back to the 5-minute time frame, SPY's a long idea above $687. Does that make sense? We have to see for this downtrend trend line to be broken and for me to feel confident taking a trade on SPY today, long, I have to see higher highs being made, and I've got to see the break of this downtrend trend line. Otherwise, if I were to just throw a line right here at 686 or 685 and a half, at today's high, I run the risk of taking a position long here just to see it reject resistance there. You know what I mean? So I have to see a higher high, long idea above 687. On the other side of the coin, SPY is gapped up this morning, and most recently, it has been making higher lows there and higher highs here. So if SPY fails this trend up and starts to sell back off, we get confirmation that this is selling off pretty much the moment that this makes a lower low. So really below 684, right? But I can't place a short level at 684 because we know that that green line there is your previous day's closing price. That is always going to be a likely point, or I'll circle it for you. That is always going to be a likely point of support. So what happens if we take the entry short there, it pulls back and then bounces? Then we're caught up in a situation that we don't want to be in. So for that reason, the short level is placed just under the previous day's closing price at $683. So those are your two levels on SPY today. Those are my two levels on SPY today that I intend to trade around. And, whoa, why did that? Okay. I did not mean to do that. Expand that. And I would recommend that these are the levels that you look at trading around as well. You could set tighter levels. These levels, this trading plan that I'm building, it can be subjective, right? Like if you really feel like you're bullish on the market today, sure, you could go long at 686. But if you are doing that, understand that you are accepting the risk of that rejecting resistance just overhead. And same with the short level. If you want to be aggressive with the short, you can be aggressive with the short. But if you do so, be aware that you're accepting the risk of that potentially bouncing at the most recent point of support. So you can do what you want, but I'd recommend being a little safer than being more risk on. Number 2 on the watch list is AMD. This is already a really, really good setup. On the daily time frame, there was a lot of consolidation right here for AMD. I don't know why I'm drawing a pattern around that, because it's not really a pattern. It's just kind of a range that was shaped up. But AMD, the last trading day, pops outside of this range, which tells us for the first time that AMD is starting to make higher highs instead of these lower highs, right? And this is on a larger time frame, the daily. So already just seeing this here, just this one pop candle outside of this range, outside of the downtrend trend line above the 50 EMA, tells me I want to look for a continuation into today on AMD. Well, we go to the 5-minute time frame and we see that AMD is gapped up. So because of the gap up, it kind of skews what we wanted to do today, because we wanted to watch for a continuation, right? So we probably would have went long, maybe around 226, 227. The problem with that now is that AMD is nearly 1.5% above where we would have taken the entry. So the trade idea that we wanted to take advantage of from here to here has kind of played out in the pre-market, which is why I don't really like gap up days, because this was already a great continuation trade idea. The problem is the continuation has happened in the pre-market, and we know that there's an ebb and flow when we trade, right? Stocks just don't move up, straight up in a linear fashion normally. So the ebb and flow would look like this, where you do have a gap up this morning, but then an opening pullback, probably not that deep, but an opening pullback, maybe something like this, right? To pull back and test the prior day's high of day would be great. An opening pullback to relieve some of that buying pressure, and then that dip gets bought. And so that is the ideal scenario today. The problem with that is if I place the long level up here at 231, that would mean AMD would dip down to about 227 and have to reverse and run from 227 back to 231, which is a 1.7% move, and then it would need to continue to move beyond that if I'm taking the entry up here for me to make this trade worth it. So this is the problem with gap up days, because we don't necessarily want a gap and go, but we also don't want this to pull back so far that it has to make a big recovery on the way back up, because if it does that, it'll probably just hit the resistance and reject, and then we don't have a trade here. But what other choice do we have, right? We have to go off of what's given, and what is given to us this morning is a gap up. So the positive to this is that our analysis that we did on Sunday when we looked at AMD and said we want to see this continuation out of it, the positive is that our analysis was correct. We were right. We are getting a continuation. It was the right thing to do to look for the continuation. The stock is obviously bullish, so we're looking at this from the lens of the correct perspective, which is a great thing. How we approach trading this today is kind of up in the air, though. So we won't know, maybe this does give us a gap and go. And if that's the case, we're going to approach it totally differently than we would if we get an opening sell-off. But just to be clear, the ideal scenario this morning for AMD is going to be an opening dip that gets bought. So as of right now, long idea above $231. That's going to be a break of the pre-market high. and a break of all of this larger consolidation area here on the daily. So a break of 231 probably sends us, I'm going to start looking for a move to 240. I think we have a little bit of resistance around 236. Beyond 236, 240 is going to be the price target overhead. So a lot of room topside for AMD to potentially move, but we do have to consider that this is all one run from the bottom of this drop here all the way up. That's the start of when this started making higher lows, higher highs. That's a 5% run without any kind of pullback. So, we just got to be mindful of that going into today's trading session. The short level I placed at 223. I don't actually expect that short level right there to get hit today because of how far away AMD is from that level. Percentage-wise, this drop would be about a 2.8 set, almost a 3% drop. And then again, it would have to move further for us to really take a trade there. So I'm not expecting AMD to get to the short level today, but if it does, we start to look at this as a green to red move on the failure to hold the previous day's closing price as a point of support. So AMD short below 223. What you really need to be concerned about here is long above 231. Will this give us a break of your pre-market high and give us a continuation today or not? One more thing while I'm here. Another thing we need to be cautious about is a move that does this. Something that looks like it's going to be a gap and go, where this gapped up and goes, and then fails to hold on the pullback retest of the pre-market high, fails to hold it as support, and then just dumps down into the low of day. We need to be careful of that because this right here will get us caught up, right? Where we try to take a dip entry off of this after we get confirmation to run it back up, and then it doesn't happen, and this continues to sell. Yeah, that happens quite often with our strategy. You just need to be prepared to cut early if that is the case. And like I said, proper position sizing will save you in that scenario. Up next is Netflix. So quite a few names gapping up this morning to include the overall market. Well, Netflix, that's not happening here. We're not getting a gap up. In fact, this is actually a gap down, ever so slightly, a gap down. It's a descending triangle formation on the daily for Netflix, which is a bearish continuation pattern. That pattern broke down on the last trading day. That's what you see right here. And then what's beautiful about this pattern breakdown is that the support of the pattern here around $93 gets treated as a point of resistance several times, right? I know it's not a perfect test of 93, but this area is treated as a point of resistance several times before Netflix even sells further. And these are aggressive sells here. The stock has been weak. It's looking weak. This morning it's looking weak. We watch for the continuation move lower. Short idea under your pre-market low at 90.5. There's no long level set on Netflix today. Nothing about this setup makes me want to take this long or even entertain a long idea here. So no long level. Team, when you're doing your analysis and posting up or building out your trade ideas, just because you can set both a long and short level on stocks doesn't mean you have to. I would encourage you to start being, you don't want to insert too much of a bias, but you do want to start trying to trade with the trend on the larger time frames. So if the stock is already moving up on the daily, try to look for it to continue to move up on the daily. It's the easiest way to be correct on your analysis and be correct on your trades when you place them. Stocks tend to move in the direction that they're already moving. It's harder for a stock to reverse than it is for it to continue going where it's already headed. CVX, next one on the watch list. So CVX, I don't know if you all recognize this, if you went and charted this out or not. CVX has a gap on the daily. This is it. From the low here at 166, from this low down to 162, it's actually down to 161. But that little peak there partially got filled by this peak there. But this gap exists, right? This gap is here. So when we zoom out and then look at where CVX is trading now, so this was your last trading day, which somebody obviously knew something, right? Because you don't just get days like that randomly. So somebody knew something, ran up CVX on the last trading day. This is your downtrend trend line, and then this thing gaps all the way up. Here's your downtrend trend line. This thing gaps all the way up, hitting highs of 187 before pulling back. Since then, CVX has been making lower highs and lower lows. Now, we talk about news catalysts and what is a good news catalyst versus what is a news catalyst that may not be so. I'm not talking like good and bad in terms of like evil and being a saint. I'm talking good and bad in terms of what is concrete and what is not. What is a rumor and what is not? CVX is rumored to benefit from everything that's going on between the United States and Venezuela at this time. It is not something that is concrete. So the run on CVX is under, and the gap up this morning on CVX is under the assumption that CVX is going to benefit. Maybe they will, maybe they won't. But a lot of times you hear the saying, buy the rumor, sell the news, is absolutely true. So buy the rumor, the stock's already gapped up, sell the news. The big question here today is CVX going to sustain this gap up or is it not? And then what makes this really, really interesting is that gap that we identified on the daily, CVX is trading at that gap right now, right at the top side of that gap. So if this sells off any lower than where it's currently at, this works on filling a double gap because this is a gap up this morning in itself, right? This whole piece is also a gap up. So yeah, it's a really interesting situation. Buy the rumor, sell the news, but if this thing sells off, you've got a double gap being filled down to the bottom side, which could mean double the volatility or twice the speed of the movement of this stock. I would already expect to see increased volatility from, the news catalyst, but the gap just adds to that. So the long level for CVX, I've placed at $170. I know it seems kind of far away from where CVX is currently trading at, but that is done intentionally. And the reason why is because of the buy the rumor, sell the news adage. Because the fact that CVX, I don't think immediately is benefiting from everything that's going on between between Venezuela and the United States right now. I think that they stand to potentially benefit from it, but it's not. I don't think that that's something that's concrete. So for that reason, I'm actually more bearish on this. Than bullish. And because of that, I'm being more conservative with the long level, placing it at 170, and I'm being much more aggressive with the short level. And I'm placing that short level right at 164. Not at 165 because I do want to give this $1 to flex and see what the opening price action is going to look like. But I think that CVX is going to be a really nice short setup today with that double gap below and the buy the rumor, sell the news. If this decides to run and proves me wrong, great. We'll be ready for it to take it long. But just off of, I'm going to just say off of experience here, I'd be ready to take this short today. Next one on the watch list, I've got 3 more for you. I know we're getting short on time here, but I got 3 more for you. These are side charts. They're going to be real quick. Boeing had a really nice trading day. The last trading day that was open. So Boeing, I'm watching for a continuation from this previous trading day top side. Long idea above your pre-market high at 229. So there's no short level here. Boeing is really strong. I'm not trying to take a stock that's strong short. I'm trying to take it long. So I'm looking for the break of the pre-market high, 229. Continuation trade idea. EMU, also a name that has really had a really nice strong previous trading day, pushed up into the all-time highs, and then we're seeing a gap up this morning. MU feels a bit overdone. It's not my favorite setup, but it's also been a really surprising name. I've been amazed at, just look at the daily. I've been amazed at this run that MU has had from $61 to $350. I mean, wild, right? And it did that in like what, 8 months? So yeah, I mean, it feels overdone. It feels a bit extended, but the stock keeps pushing. And so I want to be here for it if it wants to continue to push. So I'm not short biased on this. I'm not placing a short level on this. Only a long level at the pre-market high, $328 is where I'll look to take MU long today. The final one on the list is NVIDIA. I went back and forth about including this one on the list because we already have AMD, we already have MU, but NVIDIA also presents a different type of setup, and there are days where I see these stocks move differently. Just because they're all, same sector, similar sector, doesn't mean they have to move the exact same way. So NVIDIA, with the gap up this morning, makes it really interesting because the resistance is really clearly placed right here at 193, right? You would probably agree with that. Here's a peak and then a rejection. Here's a peak and then we get the rejection, the sell-off move back down. Well, we go to the 5-minute time frame. Where is NVIDIA trading at right now? Look at that line that we just drew at 193. Look at where this is trading at, 192.3 almost. So right under 193. So we're looking for a break of that ranging resistance, that static resistance on the daily. And what makes this now a good setup is the fact that it did gap up, but it gapped up under a point of resistance. So I'd be more willing to trade NVIDIA long as a gap and go than I would on something like MU or maybe even AMD, because this is gapping up under resistance, which means if it breaks that resistance and it pulls back, that resistance is likely to hold as a point of support because old resistance becomes new support and vice versa. So I would feel more inclined to trade in, if all of them are running, I think I would lean more towards trading NVIDIA over the other two. Cool. So that's it. That's our full watch list for today. About the account and the account challenge, I am restarting the account challenge. Last week, I think it was, I withdrew $23,000 from the account, and I'm resetting the balance back to 5K, but I'm not going to trade the challenge account probably for like a week or two because I do. If I'm being honest, I just want to trade in my personal account and I want to get some profit margin built up first before I start trading in a challenge account. It would just make me feel better. So I'm going to be trading my personal account for the next couple of days. But nothing's going to change in terms of us trading live or me giving out alerts or me giving out my entries or me giving out the contract selection. Nothing changes there. Everything's going to remain the same. I'm just not going to be trading in the challenge account. So I do want to let you all know that. And I'll probably say this again so everybody's on the same page. If you're new to the Discord server, welcome in. Thank you for joining, and thanks for giving us a try. We'd love to have you. Here's the watch list posted for you, by the way. If you're new, there's a couple of things that you should do. Number one, do more listening than speaking and asking questions. I feel like a lot of the questions that you're going to want to ask, you're going to have an answer on those questions through action and time. And it won't take a lot of time. So maybe just for like the first couple of days, throttle back on if you have questions, a bunch of questions, because you might find that what you're going to want to ask, you're just going to find it getting answered anyways. The second thing is go through, if you haven't done this yet, go through the WAP course. You do have access to that if you have access to the Discord server. Go through the course on WAP. At a very minimum, watch video number 1. Whether you're an advanced trader or you're brand new to trading, that course on WAP is going to gear your mindset specifically towards the strategies that we teach, that I teach, that we implement in this Discord server. So even if you think you are the most advanced trader and you're here to learn a different style of trading or add on to your style of trading, I still would recommend that WAP course. You could probably skip a couple of the basic lessons, but there's something in there that you can certainly learn from and apply. But at a minimum, please go watch video number 1. It's going to help you navigate the Discord server, which can be confusing. There's a lot of channels here, right? Go watch video 1. It's going to help you navigate the Discord server. It's going to help you figure out what is all offered to you in this Discord server, and it'll help you navigate to the live trading, which I'm going to go ahead and tell you right now. So video 1 tells you this, but to get to the live trading, here's how you're going to navigate there. It's not held here on YouTube. It's held on the Discord server. Scroll down, bottom left-hand side of the server. Scroll all the way down, all the way to the bottom. You're going to see a voice channel right here called the Arena. Join in to the Arena right there. That is where we will be trading live. Not the open chat, the Arena. Right? So just join, click right there, and I'll be in there in about probably 5 minutes or so. I'll meet you there. So I'm in the stream here. I'll meet you over in the Discord server. Good luck today. I do not have a top stock pick. My plan is to probably size down, have it be a feeler day. Let me see where things are going to move. Let me see what market sentiment's going to be. Let me see if I can even gauge any of that. And then if I feel comfortable, confident, we'll size up or size normal. All right.